Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, June 12th. This is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual financial advice. Anything that you hear or see here is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so we finished up the second quarter of 2025, and I wanted to go over the Actionable Intelligence Alert newsletter results. For those of you who are subscribers, we talked about this, the results in the June newsletter. Every quarter, I review the results. We follow the companies we that are in the portfolio, we update them and provide news as we go along, and that includes the report card. Now, there was a period for the last year when a lot of the things that we were invested in were out of favor, and so we were lagging in performance. However, recently that has changed for various reasons, and so we're going to report out. Now, again, it's not tooting my own horn. I say that the things that we are invested in the Actionable Intelligence Alert portfolio, they need to be pursued with a mentality of a 3 to 5 year timeline. Thing is that when you're looking for inflections or you're looking for changes in perception and revaluation, these things typically take longer than we think. And so a lot of times it looks like we're early and then people don't have patience. And so they leave or they sell, they get frustrated, they get bored, and then they miss out on the run. So I think, the thesis in general is around things being undervalued, selling overvaluation, buying undervaluation. What's currently undervalued? Commodities, resources. So I believe that we're on the cusp of a super cycle. I don't use that word lightly. We're seeing commodities, different resources break out all over the place. Of course, it's not going to be every single one. Some wag will say, well, coffee has went down. That doesn't mean if you're in a super cycle, every commodity goes up. So they have different cyclical patterns. We've talked about this before, but nevertheless, the results for the second quarter were the Actionable Intelligence Alert portfolio was up 20.5% versus the S&P being up 10.15%. It's mostly driven by a turn in a lot of the energy stocks, specifically uranium. We still have a very large component of uranium in the portfolio, and that basically was up every week during the quarter, uranium stocks. And I continue to remain bullish on that. There were some laggards in there around maybe some of the oil stocks, but I think that's going to come back into favor too. So a lot of the things that were kind of dormant or weren't attracting capital are starting to attract capital now. So that's the Actionable Intelligence Alert portfolio. That's more of the capital appreciation. We're looking for asymmetric returns. Like I said, looking for things that are out of favor, undervalued, with the possibility of having, a big return. Now, that doesn't mean that everything in there is commodities. We have other things in there too. But right now, a lot of things are things that if you drop them on your foot, it would hurt your foot. So commodities, and commodity producing stocks and offshore sector, which is starting to, I think, gain a lot of attention now. Not necessarily the drillers, but there's all kinds of subsectors in offshore that are performing very well and have already been in a bull market. So, anyways, that's what we're looking at. Again, past performance does not guarantee future performance. There's times when, we're going to have these tremendous runs and then, we may underperform for a quarter or two. Now, the dividend portfolio, as I've explained before, this was up only 2% during the quarter, versus the S&P being up 10.15%. Haven't shown this portfolio has only been around for a little more than a year, so it doesn't have a long track record. It really has a lot of energy stocks in it. Let me explain my thesis quickly. my view on the dividend portfolio. Now, there are a lot of people that, you can go buy ETFs for like the dividend champions, companies that have paid dividends for 20 or 50 years consistently and raised their dividend. You can go look for like total return, um, shareholder return, like Meb Faber. He has a ETF, I believe, that seeks out companies that are raising their dividend and buying back shares. And that's kind of what I do, but I throw a twist into it. I'm My dividend portfolio is basically out of favor sectors of companies that are paying good dividends that have the ability to re-rate. So not only do we get a dividend in an out of favor sector, a pretty good dividend, well above, matching the T-bill rate with solid companies in sectors that are currently out of value, out of favor, that have the possibility of returning to favor and having a perception change. That way, we are looking at a possible capital gain. A lot of the stocks that I choose also follow that total return mentality or view that Meb Faber has for those ETF. We want to see share buybacks also. So total return. I'm a Walter Kloss fan, as you know, and I like to see debt reduction I like to see free cash flow be directed to debt reduction, dividends, and share buybacks, preferably share buybacks, because these are accretive to me. So we want to look for things like that, and that's what's in the portfolio. Now, this thing's only been around a year, and like I said, we have a lot of energy in it, so it's out of favor, but that's beginning to turn around also. So um, it's kind of what I saw one analyst describe as, it's kind of like what he described as a dripping roast. So you put a roast in the oven, it's elevated on a rack. As it cooks, the fat drips off, creates the juices drip down into the pan. And then so you remove the roast from the oven. So you slice the roast after it cools. It's delicious. It's juicy. But then you have the drippings below it that you can make a delicious gravy out of. So not only do you get the delicious roast, you get the drippings, the dripping roast concept. That's kind of the analogy. I kind of like that analogy that I heard this other author use. So that's kind of what we're looking for here. We want to get the roast with the good companies paying dividends, but we also like the dripping for the gravy of share buybacks and the potential re-rating. So that's kind of underperformed the S&P. Maybe the S&P is not the right metric to balance it against, but I think, it's okay. I think this thing isn't going to necessarily be a barn burner, but that's what we're looking for, consistent. Um, we have some European banks in there. They've done tremendously well. They're the best performers in the dividend portfolio. As I've said before, a lot of the people ignore things. They just have this generic view. Europe sucks. Well, yeah, I think the long-term prospects for Europe are probably not positive because demography is destiny and diversity plus proximity equal chaos and war. But that's years down the road. That not isn't necessarily next week or next month. And the real issue here with the banks in Europe is that they were overcapitalized because of they didn't make a lot of loans coming out of the financial crisis. They basically had been accumulating cash on their balance sheets, buying government bonds, for example, and were raking it in and became, overcapitalized, and then approached the regulators and said, "Hey, can we start increasing dividends and uh, buying back shares?" And even the Greek banks are allowed to do that now. Greece was a basket case just in recent memory. But see, time heals all wounds. This is why you have to be attentive and watch things that are bombed out, because nothing like dries up and blows away, right? And if it doesn't get destroyed in like in a nuclear war or something, or some tremendous, sinks into the ocean or something, then the assets have some value, and then it's just determining, are they undervalued and out of favor, and then having the patience to buy them. So that's kind of what's going on. The last bullet point here, I've been tracking this with some tracking software, the Actionable Intelligence Alert portfolio since January 2020. Basically 4.5 years, the Actionable Intelligence Alert portfolio is up 288% versus a return of the S&P of 90%. So we're meeting our goal long term of, you know, being an active investor and attempting to outperform the S&P. Because as you know, I've told Most people that don't have the time or inclination or desire to do the work should probably just put their money into a low-cost S&P fund and reinvest the dividends over a long-term period of time, and they'll probably do, or a world fund at this point, probably a world ETF, that, rebalances and as low cost as you can get, and just go with that. You'll probably get 8 or 9% a year dividends reinvested over the long term. If you want to be an active investor, then you want to do the work, then, you might want to consider following the Actionable Intelligence Alert portfolio and our online community on Discord. And I think you'll find that, I think we're poised over the next several years. Obviously, we don't want to make predictions about the future. It's impossible, but I think a lot of the sectors that we're invested in are tremendously undervalued and now are coming into their own. That's just what we've been talking about week after week on these videos. Of course, that's no guarantee of outperformance. There's no guarantee that we will continue to be able to outperform. But I think after almost 5 years of data, that's what you have to look at. You can't look at just 1 year, 1 quarter of performance. This is the problem. I put on the Facebook page a discussion about Peter Lynch, who ran the Magellan Fund at Fidelity. And I think during his tenure, which was about 13 years, I believe, his average return was about 29%. So let's call it 30%. That is a tremendous track record. Peter Lynch is acknowledged as one of the best investors of all time, but he was in a period of, when rates were coming down during the, riding on the coattails of the Reagan Volcker, low interest rate, disinflation morning in America. So nevertheless, Fidelity did a study of the people that invested, retail investors that invested in the Magellan Fund. So you think, wow, over a 10-year period, if you would have just invested your money with Peter Lynch and consistently, you know, dollar cost averaged, put your whatever, or, you know, just bought on dips or just put an initial sum in and just leave it, you would have done extremely well, 30% a year for, I think, 12 years, 13 years, something like that. What Fidelity found was the average investor in the Magellan Fund lost money. Now you say, well, if the Magellan Fund averaged 30% a year during a stock bull market, and Peter Lynch was an exceptional investor, how did the average investor lose money? Because they tried to time the markets. They let their emotions run them. You can go look this up. You should go look it up. You can Google it or get on Ask AI about it. They'll show you the information. And this is a perfect example of what I'm talking about. Not being able to control emotions, not coming up with a thesis, not sticking with it, not having conviction, just chasing shiny objects. And that's unfortunately what a lot of people do. So again, looks good. This second quarter looked good. Third quarter starting out pretty good. Again, past performance is no guarantee of the future. If you're interested in following more closely, there's a link in the show notes to the Substack. I put out a free weekly newsletter. It comes out most weeks. Sometimes there's not enough good stuff that I run into, but I have a free weekly email I sent out, newsletter from Substack. Talks about, so basically all the stuff I've collected that I've read, or videos that I've seen, or presentations, or what have you, memes. It doesn't matter. Things I found interesting that are pertinent to the discussions we're having in these weekly videos and in the newsletter. And then we have the paid product, which, has two portfolios, basically model portfolios, the AIA portfolio, which is more capital appreciation, and the dividend portfolio, which I've just described both. So that gives you access to that. That's $199 a year, 12 issues, comes out usually the first week of each month. I don't necessarily have a pick every month. I don't do that. It's pretty hard to find good companies, but I do updates on the companies. I follow them, and I report out. And then if things change, if the thesis changed of why we bought it, then we will necessarily sell. For example, we just had, I'll just go ahead and publicly talk about one company we had in the portfolio. We had Sandstorm in the portfolio, which is the gold royalty company. It was being taken over now by Royal Gold. It's up about, since we bought it, about 86%, something like that, 80 plus percent. I bought it because I thought it was undervalued. It had one of its large royalties back in the day, um, was near another mine that had some issues in Turkey, an earthquake. So it kind of, and some of the debt that they had. But now what I liked about the company was they had this big runway of royalties, and some major royalties over the next 3 to 5 years. Their royalty income was going to increase drastically as got more gold, as more of their mining partners came online. And so that looked like, to me, in the middle of a gold bull market, I want to see growing production, right? So I thought it was a little bit undervalued relative to its peers. And I guess Royal Gold thought that too and sees the value and has made an offer. So I'll be removing that likely from the portfolio. I'm not interested in owning Royal Gold. I think Royal Gold's a tremendous company, but it's just not the kind of company we're looking for in the AIA portfolio. But that's what happens sometimes, right? You'll buy something, you'll see the value, you'll buy it, it'll start going up. You say, okay, I'm on the right track. Things are working out. Uh, Company was being managed very well, I thought, and then somebody else comes in and pays just a slight premium. I don't think the premium was like more than 20%, if I remember correctly. So it's what happens. So sometimes you don't realize, this is a stock that in the context of a gold bull market could have went 3, 5 times, your money. And so you get taken out, and then, you know, you're not going to see a 3 to 5 times move probably in Royal Gold during this gold bull market. It's already a tremendously large company. So that's the kind of that's the kind of setup that we look for in just a quick synopsis of what's going on. Again, nothing wrong with Royal Gold. If you like royalty companies, it's well managed. It's going to absorb Sandstorm. That was, but it's not what we're looking for in the portfolio. So we'll be looking to redirect those funds into another opportunity that has more upside. Okay, moving on for this week's slides. So I talk about this a lot. Is this time different? This was in the FT. This is basically Shiller Cape starting ratio and subsequent 10-year real returns. So I've talked about this before. The price that you pay typically ultimately determines your return. So if you buy things that are excessively priced, and CAPE is a measure of that, cyclically adjusted PE ratio, Shiller PE. You can look this up. And I've shown this type of chart before. Basically, the higher PE ratio you pay for stocks, I just look at this as usually for markets in general, not individual stocks, but markets in general. The more money you pay, if you look over here on the left, on the vertical, if you pay more than, let's say, 30 times, between 25 and 30 times cyclically adjusted PE ratios, history has shown that you have a 0 to negative return over the subsequent 10 years. Okay. And I'm not going to get into the reasons why. You can look it up yourself. You can read the data of why. There's people have written white papers around it. Meb Faber has a good paper about it on his website. You can AI this to death and it will explain it to you. Conversely, the less you pay for things, this is why I always say sell over valuation and buy under valuation. The less you pay, the higher your 10-year returns are, you see? So if you buy things when they're cheap, your subsequent 10-year returns are typically higher. And so the question the FT is asking, this is typical of what you see at the end of bull markets, of manias, which I believe we're in a lot of these stocks, obviously with these price to earnings ratios where they are and all the passive investing. Hey, is this time different? They show the Shiller Cape, they show all the data going back for the decades back to 1980. They show you what's going on. People have written papers about this. Is it possible that in this instance, in this dotted line is showing you where we are right now? So we're at, 37, PE, CAPE, okay? And so we're looking at returns to be, negative over the next 10 years, real returns. And you can't have that in what I think is going to be an inflationary environment. You're going to lose purchasing power. You're going to fall behind. And so, of course, I didn't read the full article because behind a paywall, but I can understand what the argument is. Well, we have this has happened in the past. We've had declines, but we're not declining because, yesterday and last week and last month, the market went up. So, hey, we must be in a new era. That's how people rationalize things because they have visions of sugar plums. They want to get rich. Stocks are going up, and I read an article that confirmed my bias. Now, we all have biases, including me, and this could be different. We can't know the future. But, it's like if you played this scenario out, kind of like go back to the poker analogies. If you're dealt ace ace in a hold'em game, you can already calculate, and then based how many people stay in the hand, you can calculate over 1,000, 10,000 hands that you're probably going to make money with that hand. Okay. Not every hand, you won't win every hand, but you will typically, if you play that hand correctly, over 1,000 or 10,000 simulations or games, you will have a net profit. Okay. Because that's just mathematics. Same thing is here. We have a history data that's telling us that's pretty consistent. If you look at how this all falls inside of a certain grouping, this has been pretty consistent over 4 decades, 5 decades now. And yet people can justify in their minds that this time is different. Well, we'll see. I don't buy overvalued things. I try not to buy them. Try not to get caught up in the hype. I look for, the AI thing is happening. Am I going to go out and buy Nvidia when the market cap equals 3.7% of world GDP? No, I'm not going to do that. That stock price can never justify, if you had the money to buy that entire business, would you buy it? How would you get a return out of that business? How would you get cash out of that business? And so what you're in is you're not investing, you're speculating. You're buying a stock at a certain price level, and your view is I'll be able to sell it at a higher price level. You're not looking at it as a business and being an investor. And that's fine. Speculation is fine, but understand that you're speculating. And I don't think most people know the difference. So again, it's retail investors. This is from Jesse Felder, put out this morning. This link says retail investors reap big gains from buying the dip in U.S. stocks. A record 155 billion from individual investors has flowed into Wall Street equities this year, even as markets stumbled. And so retail is usually wrong. I just told you the story about Peter Lynch and the Magellan Fund. You should read it. It's fascinating. But we see it all the time. We see it all the time. In these markets. Retail, we got a guy on our Discord who's a financial advisor, broker, and he tells little stories about different clients and he tries to help them and talk them out of things. People just do weird stuff. They just get weird ideas in their head. They're not educated on these things. And yet you know, they're basically out there stumbling around in a minefield in shark infested waters, which is if you're going to be an active investor with no clue what they're doing, and that's dangerous. So here's a chart from Top Down Charts. I like to follow this person, puts out some good charts. It's on Substack, showing you. I put up here commodities are poised for a run, showing these times when commodities X gold versus gold, when they bottom and then turn around, you could see the subsequent. This is the commodities X gold up here. You get these commodities are cheap versus gold, and you get to these kind of low points below one. These yellow areas represent subsequent commodity bull market. So we're poised, I think, here for a run. We're seeing many resources and commodities breaking on our charts. Copper, gold, obviously. Gold was the leader. This is typically what happens. Gold takes off, and then 6 months to a year later, you start seeing other commodities start to rally. And that's what we're seeing. Yeah, I think that's what's, working out for us in the portfolio. So this is a chart from the recent Sprott quarterly or uh, I think every 6 months report on uranium. I put up here, uranium miners have outperformed despite volatility. This goes back to 2020. You see the uranium miners and the junior miners have done, up over 300% since 2020. That's a pretty good return. If you just would have bought uranium stocks or just Cameco in 2020, because you had this thesis about nuclear power, you'd be up 300%. Was there volatility? Absolutely. And that's what gets people. You had this drop in 2023. People get flushed out, rinsed out, then it takes off and runs again. Then you have this last year that we've been in, people got rinsed again. But, you know, and this is why you get Steve Bartner and I were talking about this on his In It to Win It podcast when he had me on recently. People get rinsed out, and then they don't come back because they're chasing shiny objects. They're trying to time the market. But if you look at what the uranium miners have done, and even the junior miners versus U.S. equities, commodities, and the spot price, this is why I say it's almost impossible unless you're like that guy at Millennium or these other people that have these huge supercomputers with all these mathematicians from MIT and everything. You don't have any edge trading. And so people try to trade this stuff on intuition and emotion, and they just get rinsed. They're always selling at the bottom and buying at the top. And then this is what I used to do. Okay. You have to get your emotions under control. You have to create a thesis. You have to create conviction. You have to understand why you're buying something. And if you're investing or speculating, now, I'm not going to dissuade anybody from doing what they want. This is a free country. And when you're 3 times 7, you can do whatever you want, right? It's your money. It's your responsibility. But then I have people telling me that they haven't made money in uranium. Well, this is why they get rinsed out. They get rinsed out on all these squiggly things. And then, if you sell, the thesis, the supply demand is still good. It makes sense. The dysfunction we have, and you can see what's getting ready to happen. You just don't know the exact time when the thing's going to either stop the music point and this thing goes vertical, you know, but people, why wouldn't you just buy and hold and buy on the dips? You're in a bull market. What do you do in a bull market? You buy on dips. That's what the people in the Magellan Fund didn't do. That's why I'm tying all this together. You got to get your head right on this stuff. Just, buying Cameco and then going into a coma and then waking up, you know, on Friday, you would have been looking at this and going, wow, that's great. Look at how smart I am. But, people get rinsed out. The problem is when you get rinsed out, when do you get back in? See, then your emotions, those little trading devils and angels are sitting on your shoulder. Should I get in? Should I not get in? What if I buy in now and it goes down? Should I just wait to see if it goes down some more? I mean, that's the kind of stuff you get into. It's not worth getting into. In the meantime, they're building more reactors and nobody's building a mine. So I look at it as buying on dips. And at some point, this thing goes parabolic because there's not been enough investment, yet they're building more reactors. We're going to get into that some more here, subsequent slides. Why do I need to try to time the market? As soon as I see all these big mining companies come and say, somebody like BHP or Rio Tinto or Glencore or Cameco comes in and says, we're buying next gen and we're going to sink 2 billion into that mine up in Canada and get this thing going with some real mining professionals. I see a couple of deals like that actually happen on time and on budget, then I might get concerned about oversupply in the uranium market. Right now, I'm not concerned about that. So anyway, I just wanted to show this because I think it illustrates what I'm talking about. Create a thesis. If the thesis doesn't change, then if you can't endure the volatility, then you can't be in the market. And there's probably somebody out there that has traded this successfully, and like I said, I'll be with them. I'm happy for them. That's not me. That's not what we do. Most people can't do it unless you're like people at Millennium with the supercomputers and all the MIT math PhDs. You just don't have the resources for it. So this was also in the Sprott distribution site. We'll put up here, Europe reconsidering nuclear. I'm not going to go read through all this. I'll put this on the Facebook page. You know, we have an Actionable Intelligence Alert Facebook page. I put a lot of these charts up there because I'm run through them pretty quick on here. Then it gives you the opportunity to go back there and you can, read them at your leisure, check it out. I encourage folks to go over to the Facebook page. There's a link in the show notes and sign up. It helps us out with the algorithm. Try to post these different charts, and other people now starting to get some traction. Other people are posting good stuff, so it might be worth your while. But I mean, look at all these different countries. Basically, it's kind of like after Fukushima, people were like, "Oh well, nuclear's dead," blah 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 blah. Well, I used to live in Japan. I know the terrain in Japan. I know how the cities are. I've been around the country. I knew they weren't going to build fields of solar and wind farms because the country is basically rocks jutting out everywhere, and the country has no natural resources except for the people and their brain power and their industrious nature. And so I knew that time heals all wounds, and that eventually uh, they have to import basically 100% of their energy, whether it's coal, oil and gas, what have you. And so it would be naive to think that they were just going to abandon nuclear power, and they haven't. Eventually, it came back. They re-studied everything, reevaluated everything, upgraded the reactors, and they've been slowly but surely bringing them back online. And in fact, they're going to build new reactors. And so it's the same thing in Europe. With the exception of France and a couple other countries that had a few reactors. Even like look at Belgium. They had repealed, they had a law that was going to phase out nuclear power and ban construction. Well, they've repealed that last month. We talked about it. Okay, so all these countries, I mean, Italy approved a law to overturn 40-year ban because you have no choice. If you're going to cut yourself off from cheap Russian pipeline gas, you've got to get those joules, you've got to get those megawatts, you've got to get those BTUs from somewhere. If you want to have an industrial, technologically advanced society, it requires tremendous, tremendous energy inputs. And if you don't want to burn coal, then you're going to have nuclear because you can put all the solar panels you want up, the sun goes down eventually. Just, I'll challenge anybody. There's not enough minerals in the ground for batteries to go rebuild batteries every 10 years. Okay, it's not going to work. This is the cheapest, best power. Okay, and that's why they're turning to it because eventually math and physics win. As I've been saying since I've been making these videos for going on 5 or 6 years and been proven right. I'm not trying to have vainglory here and say, oh, I'm right. It was obvious this was going to happen. That was the tremendous opportunity. And so this is the art of being a successful investor slash speculator. When governments make rash decisions or dumb decisions that aren't economic, based on economics or physics or math, but based on emotions and political clout and these things, well, then it's obvious what's going to happen. You just have to wait and pounce. That's what we did. So this continued. This is an actual expansion. This shows you reactors that are being planned and built. I mean, this is going to continue. And so does this single-handedly blow out the demand? But no, but you're going to see more of this. And eventually, I think, going back here, Germany will no longer oppose nuclear's inclusion in EU clean energy rules only 2 years after it shut down its last three nuclear power plants. Germany will eventually, in my view, have to return to nuclear power. They have to do it incrementally. But again, you know, if you're in the Green Party, the whole Green Party in Germany was based on anti-nuclear. And so you have a large portion of the population that really doesn't like nuclear. But again, as energy prices go up, as deindustrialization continues, as people get poor or less wealthy, they start noticing it. And contrary to popular belief, I've seen it many times in polling after polling after polling. Everybody's for green energy. Yes, green energy, clean energy. Will you pay? They won't even, people have been polled here in the United States. They won't even pay $10 more a month. When you say you have to pay more for it, even a small amount, most people don't want to do it. So it's just interesting watching human nature, being a student of human nature, understanding what it takes. This is the problem that most policymakers have and most investors. They don't really understand how a lot of these things work, and yet, they're making policy. Again, physics plus math equals nuclear power. You're not going to run, these societies. Somebody will throw up and say, well, in Norway, they have 100% EVs. It's Norway, okay? Or the Costa Rica ran for, a month on 100% renewables. Yeah, but they're tied into the whole grid in Central America. So, you always have to look at these things. Are you going to run the United States that requires like 100 trillion BTUs of inputs? I mean, I did that calculation in a university class on environmentalism. I had to take it part of my power plant technology degree. And I got in a big argument with the teacher. I said, okay, let's assume a certain amount, 2.5 megawatts per turbine, 30% capacity factor. I think I estimated that we would need like over 3 million wind turbines here in the United States because we had to compensate for the fact that was just a rough thing. That wasn't talking about distribution, substations, transmission lines, all that stuff. And then where are you going to get all the resources? We're going to get all the people to maintain them. You're going to have windmills everywhere. Not every place is suited for them. It doesn't, you see, when you start actually diving down into this stuff, it's not as easy as everybody thinks. And so the average person, again, I encourage people to watch the old jaywalking videos from the Jay Leno show when he used to go on the street and ask the average person on the street, you know, where does bread come from? Where does electricity? The average person doesn't know, and they don't need to know, right? We have a division of labor, bagging on people. Same thing. I don't speak, Malay. I don't speak Chinese. Why? I have no need to do that, and so I don't know. I'm ignorant of it. So, but when we're investing, we're putting money at risk. We probably need to think these things through and not do it based on, politics and our emotions. Again, Permian rig count continues to fall. It's going to be interesting to see if this is a manifestation of just low prices because the price deck has went up now because prices have increased, break-even prices. I saw that like a couple weeks ago. I think it was the Dallas Fed put out they put out information about what's going on in the oil fields. One of the things they noted was, and I think Christine Guerrero has written a lot about this on Twitter or X, about cost of disposing of the produced water. When you produce oil in these shale fields, you produce a lot of water with it. It's not clean water that you can drink. It's got all kinds of heavy metals in it. It's brackish, and so you you produce a lot of water. It's called produced water. And so you have to do something with this water. You can't just dump it on the ground. It's millions and millions of gallons. And what they typically do is they'll either pipe it away. There's extensive pipelines out there, or truck it away. It'll go into a tank, and then trucks come and pick it up, and then they take it to disposal wells. So they'll drill wells, other wells, and inject this water into those wells. This is why you've been having all this seismic activity and earthquakes out there, which is another issue. And so you're getting to the point where the capacity is you're running out of capacity for all this water. It's raising costs. This is the one of the benefits of like owning a company like TPL or LandBridge. They recognized this and bought up a lot of land. Well, TPL already had the land. I'm not going to get into that whole story, but I think TPL generates like $100 million. I don't know if it's a year or quarter. I can't remember off the top of my head. You can look it up. Just off fees for disposing of water or allowing people to pipe water over their land. Same thing with LandBridge. And so that, as the cost of getting rid of the water goes up, well, then you have to put that into your calculation of whether a well is, going to pay back. Something that you could make money on at $50 oil a couple years ago doesn't make sense at 65 or 70. And that's what we're hearing from a lot of the larger drillers as they have consolidated, as there's been a lot of takeovers in the Permian. the focus has shifted from just drill, baby, drill, so I can get my stock options by getting production up. The incentive has changed for a lot of the executives and management away from drill, baby, drill, and you know, regardless if it's cash flow positive or profitable, to an emphasis on preserving tier one assets, maintaining production, and returning cash flow to shareholders. So some people might look at this and say, well, you're wrong, John. Basically, what's happening here is the rigs become more efficient as we go along. Human ingenuity increases efficiency. Absolutely. That's going to continue to happen too, but it doesn't happen that fast. So we'll see what happens. I think this has been a major contrarian view that I've had. I think I'm on the right side of this. I think that the spare capacity that OPEC has, bringing back some phantom barrels and all these other things, OPEC lies, the Saudis lie, everybody lies nowadays. I don't believe anything anybody says. And, if the Permian, as we've said before, if the Permian is in fact plateauing and peaking out, that's where basically all the oil supply growth came from, was U.S. shale over the last 10 or 15 years. And so what's the next area that's going to make up for the declines? Because we continue to experience declines in the world of 5% a year or 6%, depending on who you want to listen to, Exxon, for example. So if you're doing 104, 105 million barrels a day, you basically need to find you're declining by 5 million barrels a day. Plus, demand is not going down. Where is this? You don't hear, the IEA has been saying for years peak demand. There is no peak demand. Demand goes up about 1 million barrels a year, 1 to 1.5% a year. And so you need to find 6.5, 7 million barrels a year, replace what's the decline, and to account for the new production. And so this idea that we're in a glut and there's all this spare capacity that OPEC has, well, we're going to see, because I think we're going to find out who's right on this. And I think that buying long life reserves in Canada, for example, um, again, I've mentioned Adam Waterous at Strathcona. People should probably become familiar with this guy. Waterous Capital Management, I think, is the name of the fund. And I can buy, what's wrong with a company like Imperial? Nobody talks about it. It's, it's a step, it's an orphan child of Exxon. It has a tremendous oil sands resource and facility. Nobody talks about it. All the thing does is produce cash, and they buy back shares. You know, you're going to beat the S&P with over time with a stock like that, in my view. And if we're transitioning what I think is into a move higher in oil over the next few years, a tremendous move in oil over the next few years, in my view, then I think you'll do well in some of these stocks. But we'll see. Maybe if oil goes to $100 a barrel, they'll put all these rigs back to work, and it wasn't necessarily a geological issue. It was an economic issue, and they can ramp up, production again. We'll see. So this is interesting. I don't know how many people are paying attention to this. This could happen over the next week or so. I don't want to get into conspiracy theories. I don't want to get into speculation, but I think, when stuff happens in the market, you kind of, why is oil kind of rallying recently? I think one of the reasons, somebody always knows something. And so this was a Bloomberg article. Oil is higher Friday as traders focus on U.S. President Donald Trump's planned, quote, major statement, unquote, on Russia over worries that the already expected second half supply glut may increase further. Trump's renewed criticism towards Russian President Vladimir Putin, along with expectations that the Senate will pass a tougher Russia sanction bill, are increasing the odds that future Russian energy exports may decline. Trump is expected to greenlight the tougher sanctions package, but traders still have doubts on how aggressively it will be enforced. And so you have these neocons in the Senate, like Lindsey Graham and this Blumenthal character and deep state. They want to destroy Russia. So what they're planning on doing is saying, okay, anybody that imports Russian energy, oil, gas, uranium, what have you, that we will subject them to tariffs up to 500%. Well, the majority of the oil that Russia's exporting goes to India and China. And so this would give the Congress, the neocons, they want to try to grab this away from the president. They want to pass a law and say, okay, if, you know, India, you need to stop taking oil in from Russia, which they get it at a discount, so does China. Or we're going to throw 500 up to 500% tariffs on you. Okay. Same thing with China. So, and the president, I think, is trying to be a little bit more pragmatic because if those countries require whoever's taking the Russian oil, I think Turkey takes some too. I don't know. I guess you could look it up with AI, but primarily focusing on China and India. Well, if they're importing millions of barrels of oil a day from Russia, and all of a sudden 500% tariffs are put on them, basically you're going to throw the world economy for a loop. I don't know if they'll stop. If they can stop. I mean, China has a huge um, strategic petroleum reserve, but it's not going to last forever. Um, what does the oil price do? They'll have to replace the barrels in the open market. What does that do? Oil prices will go up rather quickly. And then what does that do to the Trump agenda when he was talking about drill baby drill and low oil prices? Again, I've said this before. The deep state said this during the Iran recent 12-day war. Most people in the U.S. have no clue what their politicians are doing, what their policymakers are doing. They have no interest in it. They're apathetic. They don't trust them. They don't believe in them, but they don't really pay attention. So the thing that would get people's attention is if gasoline was $6 or $7, $8 a gallon for some period of time. Uh, Again, you're only about let's see, August, September, October, November. You're 16 months away from the midterm election. Do we really want to throw the country into a deep recession? Would the president have the ability? You know, I've heard some other commentators say, well, he thinks that this whole 12-day war thing went great with Iran, and he's a narcissist, and maybe he wants to end this war, wants to get out of it. I said this before at the start of the thing. He should have just cut ties with the whole Ukraine thing. He wouldn't even be involved in this right now. Okay. Um, but he didn't do that. He's been pulled back in. He's pulled back into this thing with Iran and um, this thing with Russia. And, if people like Lindsey Graham have their way, then, you could tank the presidency. I mean, I think actually President Trump endorsed Lindsey Graham. He's coming up for reelection in the midterms too. This is one of the biggest bums in the history of the Senate. I mean, this guy's terrible, but you know, doesn't really profit lamenting about that. So this is something that could happen in the next week that I don't think a lot of people are paying attention to. I put here, is Lindsey Graham the foreign policy czar now? So it says highlighted here. Graham clarified that this is the bill they're trying to pass, targets countries whose oil purchases help fund Russia's war effort. Quote, if you are buying products from Russia and you are not helping Ukraine, then there's a 500% tariff on your products coming into the United States, he said, unquote. He cited that India and China account for roughly 70% of Russia's oil exports. And then it would be Donald Trump can grant limited waivers under the bill. The legislation includes a provision allowing the U.S. president to issue a one-time 180-day waiver to any country based on national security interests. According to a Hindustan Times report, lawmakers are also considering amendments that would allow a second waiver under certain conditions. So, do I think that the president wants to throw his agenda under the bus for Ukraine? No. Do I think that he really has the power to do everything that he wants? No, he doesn't. Do I think he's wrestling with these neocons and Graham over foreign policy? Yes. So it remains to be seen. We could get a short-term big bounce and rally in oil prices if they throw 500% tariffs products, if this nonsense passes, throw the world economy for a loop. Um, the thing that I want to emphasize, we don't know what will happen. Just the mere mention of this stuff, if you're a Chinese policymaker, an Indian policymaker, and you're in BRICS and you're in the Shanghai Cooperative and you're trying to set up this alternative payment system to SWIFT, aren't you going to be more incentivized now to get even further away from the United States? What the hell kind of policy are we running here? This is, if you don't think that this is bullish for gold and negative for U.S. Treasuries, you're trying to roll $9 trillion of debt this year. You have 37 trillion. You're on your way to 50 trillion in debt by the end of the decade. These people are not going to buy our debt. I mean, do you see how futile and stupid this is? This all started because two oblasts in eastern Ukraine wanted federal system and wanted to have the Russian language recognized and the Ukrainian Orthodox Church recognized. Why did we get involved in this? And now this has been going on 4 years. They said that the Patriot stocks are down to 25, Patriot missile stocks are down to 25% of where they need to be. The Russians are sending 700 drones a day into Ukraine, big drones. Missile production's up. Drone production is likely to reach 1,000 big drones a day. There is no air defense in Ukraine. The Russians are advancing everywhere. And it's time to cut ties with this. Let the Europeans deal with it. Okay. Every people are, you can follow the tactical day to day, what's going on there. Um, if you, there's plenty of channels on YouTube that track this stuff. There's plenty of Telegram channels. People really don't know what's going on. We had Mr. Rubio come out and said the Russians have had 100,000 casualties since the beginning of the year. It's not true. It's lie constantly. Why are we involved in this? Why is, what's funny, I showed on the Facebook page the other day when Trump said he was going to send more weapons, continue to deplete the stock of weapons, of our weapons. I guess the war with China must be off now because we don't, we're giving everything to Israel and in Ukraine. Um, you know, and then they're going to possibly do this. So we'll see what happens in the next couple weeks with Trump's big announcement. Um, I think he's fighting with these guys behind the scenes because he wants to control things. They're trying to push their neocons. They're trying to represent the establishment, the weapons manufacturers, the different think tanks, people that have ulterior motives. This doesn't benefit any small business owner in Dubuque, Iowa, or the guy who's a pipe fitter in, Baton Rouge, Louisiana. That's what I'm concerned with. Okay. And in the meantime, you're going to put your agenda on the rocks for this nonsense. So we'll see what happens. If you just watch the oil price next week, kind of pay attention what's going on here because if they get this legislation passed, then they're going to want to push for this, and we'll see what happens. I just think it's still positive for a multipolar world because if you're, like I said, put yourself in the shoes of a Chinese or Indian policymaker or some other smaller country that imports Russian oil that needs the oil. Why am I being subjected to this? I'm just, trying to take care of my population. I go back to what the Minister of Energy for India said when this smarmy, smart mouth Bloomberg reporter several years ago, a couple years ago, asked why India continues to import Russian oil. So because I have 1 billion consumers and my responsibility is to provide energy for them at the cheapest price possible. That's my concern. So we'll see what happens. I want to show this is from U.S. Global Investors. This is showing you year to date, well, last year at least, year over year. S&P down here in blue up 13%. Bitcoin is up 105% over the last year. Gold is up 38.47%. And now silver now, this is what we said would happen. Silver broke out this week. I think it's let me see what let me look on JM Bullion and see what the 38.65. I think it hit 39. It's definitely punched above, broken out. Yeah, this is so prepare for a wild ride in silver over the next weeks and months. Um, but Bitcoin, I think, made an all-time high this week. Uh, again, I don't own Bitcoin directly. I own it through a proxy. Talked about my investment in FRMO, and I think it's Murray Stahl runs that, Horizon Kinetics guys. If you really want to get your mind blown, read the Horizon Kinetics. Kind of write reports like Gorin and Rosenzweig does, quarterly reports, and their thinking, and then listen to the FRMO quarterly calls that Murray Stahl does. Brilliant people, and they have a way that they are investing in Bitcoin. They make Bitcoin, they invest in mining, but they do it profitably. So that's just a side note. But I just wanted to show this because this is indicative, I think, of what we just talked about, which is people are diversifying away from the US dollar. The US dollar is not going to go away, but people are, looking at the, you know, nothing stops this train physical fiscal environment that's going to happen over the next several years. I mean, I've been talking about this before, not before everybody else, but we're always catching these trends. Earlier, I was talking about $50 trillion in federal debt by the end of the decade. The CBO said that, a year or two ago. It's probably going to be higher because likely we'll have a recession between now and then. We continue. There's nobody, again, that wants to stop spending. You can vote for whoever you want, and you're going to continue to get wars and more spending. Guaranteed. I don't care who you put in there. And so people understand that when you're running $2 trillion a year deficits, or $1.5 to $2 trillion a year deficits, 6-7% of GDP, piling on the debt you already have, with interest expense going crazy, it's like the crazy relative in your family that, goes bankrupt because they can't stop spending the credit cards. And they get eaten alive by try to make the minimum payments, juggle things around, then the thing finally blows up, just like businesses. Most businesses go bankrupt not because the business actually failed necessarily, because they have too much debt and they can't service the debt. And this is what happens to empires. So this is a reaction, certain amount of it, I think. People are looking at this and going, there's no responsibility here. These people are going to continue to spend. They're going to continue to keep doing what they're doing until they can kick the can down the road until they hit a brick wall. And so I think the thing to look at here is that historically, when silver gets going, it goes quick and fast. So pay attention. I don't have a silver stock in the portfolio. There's plenty. We may add a couple here. I might do a special notice. I did some research to find out what the pure silver miners were. I probably need to go back and do the all-in sustaining costs and stuff. But this thing's going to move pretty quick. A lot of the money's just going to come in to the large market cap stuffs like Coeur d'Alene and stuff like that. You probably won't go wrong with that, or just buy an ETF. But there's some smaller companies that are going to move. When silver moves, it could easily go to, 50, 60 bucks, in a week or two, couple weeks. And, we talked about when that gold silver ratio got to 100, that was ringing the dinner bell. It's time to buy silver. So I have added some silver stocks in my personal portfolio. They're very volatile. But again, it's breaking out. It needs to do a lot of catch up, and it will typically overshoots when it does get going. Wanted to talk about this. Total data center capex has reached $593 billion in the current year, 2025. That is crazy. And you see the different companies here who's spending, projected to, by calendar year 2028, pretty much almost double to $1 trillion. Again, I don't put a lot of stock into this. It's been growing. You see these actual expenditures. 20% compound annual growth rate. We've learned our lesson in this in the past. But even, let's assume it gets to that level, again, copper, concrete, technicians, construction workers, where's all this coming from? And so this isn't just in the US, this could be other countries doing the same thing. What's going to power these things? We've talked about it. Okay. The other question I have is as these companies get into all of this, Tesla, Amazon, Microsoft, Google, I asked the question the other day, I think it was on the Facebook page or somewhere, and I said, a lot of these companies were high margin, they didn't have a lot of fixed assets. Now they're starting to get in building all these data centers. When you build all this stuff, okay, you have to maintain it. You have to get power. Where do I get the power? Elon Musk brought his own power plants into Memphis and got his data center up. You know, Now you're starting to get into being a power plant manager or at least contracting with somebody to do it. You better have some knowledge about it. What does that do to your margins? Are you still a high margin business? Are you getting more asset intensive, which usually results in lower margins? What's that going to do to earnings? Perception of these companies? Have people thought all this through? Is are these people going to be able to get a return on these investments? So um, we'll see. We don't know that yet. To power these things, to cool them, the amount of water that's needed. I mean, this is getting pretty sophisticated. So we'll see if this continues. I think it's a tremendous opportunity for energy, as we've been talking about. Again, you know, most of the people in the world still don't have air conditioning, and many of them don't have refrigeration in the emerging markets. What's that going to do to copper demand? Where's all this copper going to come from? If you look at with copper prices breaking out, uh, what's that going to do to like Chile? It's been one of the best performing stock markets this year. That ETF, I mentioned it, you know, earlier this year. So there's always ways to play these things without directly buying a company like Nvidia, for example. So, anyways, I just wanted to show us because there's a tremendous amount of investment happening, uh, and paying attention to this makes sense to me. This is another reason why I like TPL and Landbridge. If you read the FRMO or the Horizon Kinetics and FRMO conference calls, you'll understand why Murray Stahl is such a big advocate for TPL and what could possibly happen. The three things you need for a data center and why West Texas. I think the Fermi announcement, I think in the last few weeks or month, where they're going to build this like 5,000 megawatt nuclear facility data center campus up in, I think it's Amarillo or Abilene. I think it's Amarillo. Is an indication of these things. You're out, away from everybody, but you need three things: water, power, and the land. And you just can't put everything in Northern Virginia. You're running out of space at some point because these things become so large because you can't stack them anymore because things used to be air conditioned. Now you have to use water to cool it because the heat being generated by these processors, you can't with water weighs a lot, so you can't, have multiple floors where you could just have air conditioners in the past. So this stuff has to be spread out, okay? And unsightly, and it's, do you have the necessary water and power to supply these things? So there's opportunity out there for sure. Talked about potash. Again, you can't kiss all the girls. I talked about it a couple weeks ago. Looks like it's breaking out again. We had the original breakout earlier in the year. Then we had this kind of flag pattern. Now it looks like it's breaking out again. You might want to take a look at it. Nutrien, Mosaic, those are some of the names. Intrepid, Potash. I don't own anything right now in it. I was going to take a look at it, but again, you can only have so much bandwidth, right? So something to look at. So this is an article from, this is why, this is the stuff that I think Trump should be focusing on and not devoting all of his time to deep state foreign policy nonsense. But this is Robert Friedland in the FT. He was they were talking about, the article was Trump's intelligent copper tariffs will wake people up, says mining billionaire. So, I think that they were considering 50% tariffs on imported copper into the US, and people started freaking out. Trump doesn't know what he's doing. So, a couple snippets from the article. Billionaire mining entrepreneur Robert Friedland welcomed US President Donald Trump's vow to impose a 50% tariff on copper imports, arguing that that domestic production of the metal was, quote, fundamental to America's national security, unquote. Quote, there's a new list of critical raw materials, and without it, you can't do anything about global warming or greening the world economy, and you have a critical vulnerability in national security. Well, they're not worried about global warming or greening, but the national security is definitely a consideration. This was a quote from industry veteran Friedland told the Financial Times. Friedland, 74, dismissed any market reaction as, quote, irrelevant. What's really going on here is that the U.S. wants the metal to be produced in the U.S., refined in the U.S., and not just copper. Copper is a paradigm for probably 30 critical metals. So I talked about this I think a couple months ago. The boom that we could have, I think I actually uh, was in one of the newsletters. I wrote this up, the amount of mineral wealth here in the U.S. Um, and, throwing this tariff on raises the price and incentivize, the United States isn't some peon in copper production. I think it's like the fifth largest copper producer in the world. So incentivizing people to mine here, taking away restrictions from mining, encouraging people to mine, throwing this tariff on, incentivizes, gets the price up, incentivizes people. But you also need, smelting and refining. The problem is most of the refining and smelting is done in other countries. I think total, I saw a chart. I think China has 150 smelters and metal smelters and refining plants, big ones. The United States has 10. Uh, so we need to encourage that. And that's, we've offshored all that stuff because it was too costly, it was too dirty, it was, we didn't want to deal with it. It was choo-choo train industries. We're high tech now. We've talked about this before, but Trump administration, from a national security perspective, sees this as, you know, I think as part of the overall uh, scheme of things. It's like I think there was a recent something just happened in this last week where Trump administration is incentivizing rare earth metal production. I didn't have a chance to get fully into the news, but you're going to see more and more of this. And I think looking for companies that can benefit from this uh, trend will be uh, will be you know something to look at. And I would prefer they focus on this. I would prefer they focus on building out the nuclear power plants. I would prefer we focus, as far as foreign policy, on the Don Road doctrine, not going around like we are now policing the world. We can't do that. We don't have the money. We don't have the effort. We're hollowed out industrial. I mean, we've been talking about this for years about how we've hollowed out the U.S. economy and middle class jobs and put ourselves at risk because, if you're relying on China for materials and components for your missile technology that you're ostensibly threatening them with, have a war with, I mean, what do you think's going to happen? So, um, I'm more for trading with people, negotiating with people, finding common benefit with people, not going around the world with a my way or the highway. You know, talk soft, talk big with a big stick doesn't work anymore. We don't have the ability to do that. And we don't have the manufacturing ability. We don't have, I mean, we are a paper tiger. While a lot of people are going to disagree with me, but I think, you know, we have a tremendous opportunity here to reverse things and have this tremendous economic benefit, use our own resources, which are in the trillions, by the way, in the ground, create jobs, create more security for our country. And, yet we have people opposing that. And we have this administration being distracted by deep state, you know, post World War II, liberal world, New World Order nonsense in Ukraine and Israel and all these places that nobody here cares about. Well, very few people. So how do I like Glencore. Talked about this before. A major copper miner, tremendous coal assets. Looks like they've bottomed. Again, no guarantee, but I think that these guys know what they're doing. And if we are, in fact, in the commodity super cycle, take a look at Glencore. Yes, there's going to be opportunity in smaller companies and in juniors, but I think, this is a company like this is a foundation, a base that you can build off of and speculate in juniors, but still participating via uh, a, 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 a top-notch, well-run mining company. Wanted to show this VanEck Rare Earth Strategic Metals ETF. Looks like there's some action happening here over here on the far right recently. Volume in this ETF. Not saying this is a breakout, something to watch. I think I haven't really looked at the components. I think there's a lot of lithium in here, but lithium has been bombed out the last going on the third year where this thing's down pretty drastically. Lithium's down. Typical what happens, right? The lithium price went up tremendously. What happened? A lot of production came online. It's going to be the same thing in a lot of other metals. Okay. Economics works. If the price gets high enough, it will incentivize people to invest capital and, alleviate the supply issue. So, anyways, something to take a look at. This thing has, this thing typically does go on runs. We've seen you can go back even further. This is a 10-year chart. You can go back even further. This thing can go on some runs when it gets going, and might be something to look at, to take advantage of. I'm not. I'm just throwing that out there. Something I noticed. Okay, I'm going to drink a little bit of coffee. This will be the time when I transition to the political and conspiracy version of the what I like to talk about sometimes. A lot of people don't like this, so if you're one of those people, this would be the time for you to disengage. Okay, this is Pam Bondi, our Attorney General. You see portrait mugshot of Jeffrey Epstein in the upper right. I'm not real happy with this. Um, Something's going on here. I find it interesting that we have a woman sitting in prison for 20 years, this Maxwell woman, whose father, by the way, Robert Maxwell, was a big magazine publisher, newspaper publisher, and was a known Mossad agent, by the way. We have this, I'm not going to dive into all the Epstein thing. I want the list of the clients, the people that were blackmailed. They were running a honeypot. MI6, Mossad, the CIA, who knows? Okay. And I want these people identified and I want them prosecuted. If people went down there to the New York apartment or out to the ranch in New Mexico and had sex with underage girls, some, I'm not even talking about 17 or 16, even younger, we need to know who those people are and we need to prosecute them. And we have the president now put on the spot the other day where he said, "Why do you keep talking about this? This is over with." It's not over with. It's possible this man's not even dead. Did anybody consider that? Because Megyn Kelly, about a year ago on her show, was saying you're going to be hearing a lot more from Jeffrey Epstein and maybe even himself. But I can't say anything right now. So, this guy, they were running a honeypot. They were blackmailing people. They have it on video. They know who these people are. They reaches the highest levels of power. Okay. We know who the people are that were going down there. What were they doing down there? Former presidents, the current president, people high up in academia, legal profession, Bill Gates. What were they doing? What were they doing? So we have this woman sitting in prison for 20 years, prosecuted for proffering young girls only for Mr. Epstein. He was the only person that was involved in this. And this Pam Bondi woman, okay, where's the special prosecutor? Why isn't this Acosta guy who was the attorney general that let this guy off the hook the first time when we know that he said this guy's an intelligence asset. That's what this Acosta guy. You can look all this up. I'm not making this up. I don't even think this guy's actually dead. I think they've got him in witness protection somewhere. I mean, we all, it goes back to kind of um, what Solzhenitsyn said about the lying in the Soviet Union. Let me just quote this. We know that they are lying. They know that they are lying. They even know that we know they are lying. We also know that they know we know they are lying too. They, of course, know that we certainly know they know we know they are lying too as well, but they are still lying. In our country, the lie has become not just moral category, but the pillar industry of this country. That's exactly right. He was referring to the Soviet Union. It applies to the United States in 2025. Lie after lie after lie, deception after deception. Okay. All about preserve money and power. I've heard different views of why they're not releasing this, why they're never going to release it. Okay. Because it would bring down possibly the entire United States government and other governments. Okay. We have the thing where we're supporting this country, Israel. Okay. We're supporting this country, Israel, what some people consider what they're doing to the Palestinians a genocide. I'm not going to have an opinion on that. It's irrelevant. What if it comes out that, they, in conjunction with, the CIA, Saudi intelligence, MI6, were running a honeypot where they would get politicians or different people in power taped having sex with underage kids? What would that do if that all came out? And we were talking about, I'm not talking about, prison terms. I'm talking about there need to be like military tribunals and hangings. We're talking, if you, what is happening, with all these children that are going missing every year? We live in a country where pedophilia and child exploitation is rampant. And who's doing anything about it? This is the most high profile case. What is this Bondi woman doing? Okay. Why is the president becoming animated when he's asked about it? Along with immigration, this is my biggest issue. I don't want to see the videos. I don't want to have the videos described to me. If people had sex with underage children and they have them on tape, they should be prosecuted. It's like Thomas Jefferson. Well, the quote attributed to Thomas Jefferson, you know, quote, I would know the truth even if it brought down heaven, unquote. Well, that's attributed to him, but but he did say this, there is not a truth existing which I fear or would wish unknown to the whole world. We've got to clean this mess up. They were talking about on Tucker Carlson's, if you want a revolution, this is the way to get it. What is going on with this issue? And I'm frankly tired of it. They're covering up for the intelligence agencies. This thing is so deeply ingrained. I'm not going to get into some of the stuff that I, read about history. This stuff goes back to the Canaanites. It's exploitation of children, child sacrifice, child sex, all pedophilia, all this stuff. And for some reason, there seems to be some kind of with the elites or the establishment they seem to be attracted to this. It's very dark and demonic and satanic. I'm not going to go down that road right now, but something is not right here. So this Maxwell woman is in prison for 20 years, and the only person, you know, he was this one guy was exploiting all these children by himself. What was going on down that island? Why were those people going down there? Why, if you had a business associate or somebody in your circle of friends, and they got prosecuted and convicted, which he did in Florida, for not to the full extent, they kind of played it off. but he was a known child predator. Would you associate yourself with that person in your circle of friends? Would you say, look, man, I can't hang out with you, man. I can't hang out with you anymore. I don't, you're convicted child predator. I don't want you around my family. It's not the kind of person I want to hang out with and be associated with. Okay. Because these people don't get reformed. And as we know, he went right back to doing it again. Why was he doing it? Where did he get his money? Guy was a bum, man. I don't even think he has a college degree. This guy was an intelligence agent. He was hooked up with this Maxwell woman. Her father was working for Mossad. I mean, it's all a big lie and obfuscation. Everybody knows it. Everybody knows that this is rotten, and yet they're going to try to cover it up and just make it go away. Okay. Well, I think eventually the truth's going to come out, and I think it's going to shock many people. But I'm very disappointed. This woman needs to go. I don't even know what she does. All I ever see her do is be on Fox News. Uh, she likes being on getting interviewed and talking a lot of smack. What is she doing? Who's being prosecuted? What are the investigations going on? Is anything happening up there? I mean, she's firing a lot of prosecutors and firing a lot of people that have, been in there. Okay, that's your prerogative. What else are you doing? What's the priorities for this administration and the Justice Department around crime, busting up all these foreign gangs that are here, drug cartels, all this pedophilia? I mean, this stuff stretches, I think, into the highest levels of government and has been for years, not just the US government, in the UK, Europe, in Hollywood, you know. Like I said, I don't want to hear the salacious uh who did what acts. I don't want to see it. If they did exploited children, these are the worst of the worst. Okay. If that you're going to exploit these children. And you have these people that they have a victims fund, an Epstein victims fund. People have been compensated for being victims of this person and this Maxwell woman, but they have to sign an NDA if they get compensated. So Epstein was the only person that abused them. They can't see what I'm saying? It's rotten. So we have a fund that people are getting disbursements from for being exploited, but we don't know who exploited them. And we have a woman in prison for 20 years that was procuring children for just this guy, no one else. Really? All right, that's all I'm going to say about it. I think this is going to a major issue. I don't know, obviously, the full story. I can't possibly know. You can go down rabbit holes all you want with conspiracy theories, um, but I just think it's just as simple as, you know, intelligence agencies playing off of people's human weakness and their sinful nature. They do things, people that are attracted to, this kind of stuff, and then they get them on tape, and then you have them. Uh, they'll do your bidding because they don't want to be exposed and lose their position and power, and then go to prison. All right, that's it for this week. This is kind of a dark political thing, but this is so rotten, it just supersedes everything else. And so I hope that sunlight eventually will disinfect it, uh, but we'll see what happens. All right, guys, that's it for this week. Again, Actionable Intelligence Alert newsletter on Substack, free newsletter that comes out every week or most weeks, and the paid product. Feel free to subscribe, take a look at it. The Facebook page for Actionable Intelligence Alert, a lot of these charts will be up there. And during the week, we put up other things. Check that out. Appreciate all of the patronage. Appreciate the views. The channel continues to grow. The newsletter continues to grow. And it's all because of you guys. I thank you from the bottom of my heart. Have a good week. We'll talk to you next time.